Okay, everybody, in this particular video, I'm going to be going over some of the easiest money that you can get in the market, in my personal opinion. It's called Easy Money Trade Setup, okay? And in the Easy Money Trade Setup, I'm going to show you exactly what I do for the most part to be able to find some pretty good trade setups with ease. Okay, with ease. It's not very complicated at all if you know what to look for. So I'm going to make it even easier, especially for those who work a full-time job. One of the primary focuses that I do is I trade off the 4-hour time frame. Okay, the 4-hour time frame. And as you can see, here's a trade. The market is not even open yet, but I've carried these trades over from last week. As you can see, I'm currently up 118 pips on this trade, and this is a trade I took while on vacation for my wife's birthday. And I was still in these trades making money while on vacation. That's because of the H4, which is the 4-hour time frame. So I'm going to show you how to easily find some of these trades. Very, very easy. They're not complicated at all, okay? So let's take a look. Let's kind of go do an overview of why I like them. Of course, there's two strategies. One of them was the Stairmaster, but one is just a solid triple arrow setup on the 4-hour, all right? So let's talk about it. What's the benefits of the 4-hour charts? Number one is less chart time. It gives me the ability to travel, do other things that I do outside of this business and not feel rushed or emotional because of shorter time frame trades. Okay, number two, they're very easy to spot. I like this one. I mean, it's just easy. You see this, triple arrow setup. Get in as soon as you can. That's all. The other thing, it absorbs news events and market makers' foolery a whole lot better. As you can see, here goes some stop hunt candles or news event candles. Here's a big news event candle and spiked in both directions, which is why people who trade primarily only on shorter time frames tend to lose a lot more than the people who trade on higher time frames for the most part. Why? Because when these news events come out, look at how it hit in both directions before the candle just simply settled back out and resumed its pattern. But see, on the 4-hour time frame, even though I was on vacation, didn't know anything about the news, as these things were happening, these spikes were happening, it didn't really impact the overall direction of the trend. You can see it happened here again. Here goes both directions, wiped out, settled back down, resumed, came back up, spiked, wiped out, both directions, wiped out both directions, came back. But I was in my trades comfortably through the whole ride. Okay. There are certain pairs I don't trade a lot, which is the Swiss CHF and the Canadian dollar, because they tend to spike tremendously, a whole lot. But sometimes if I find a good setup on them, I'll take the trade. Here's another example. I'm just randomly scooting back. I wish I would have caught this trade. But as you can see, here's the Euro USD, and this is a buy on October 1st. And as you can see, triple arrows came in. It did its movements, and then settled up and came back up and reset. And this is the one I got in. So as you can see, the 4 hours is pretty nice, pretty laid back, calm entries, nothing to worry about, and you can pretty much do some pretty good pip movements in this session here using this. Okay, so let's kind of go through some, and realistically, it's really nothing magical to it. It's just as soon as you see triple arrows on the 4-hour, get in, place your stop loss above. If it's the price is way up close up here, you put your stop loss above the big arrow. That's what you do, or you can put it above your super easy SRs, okay? But to make it a little more comfortable, when you first get in, you might, because they do spike these a bit when you first get in, okay? So consider it like this. Consider that when you first get to triple arrows, especially on the 4-hour or any other time frame, the most turbulence you're going to get is most of the time at the top. It's kind of like if you're at the top of a mountain, the most turbulence you're going to get from the wind is at the top of the mountain. So most action, the bulls or bears are fighting who's going to take control, and that's why you get a lot of spikes up at the top, and then it tends to, drift to where it's supposed to go. So one of the things I like to do, yes, I see that I can put my stop loss here, but if the price is too close to this line, I'll move it right above the big arrow here on the 4-hour, okay? So let's kind of look at a couple of examples and then start to trade and weave off in the right direction. So what I do is I just simply go through them. See, AUD, look at there. Triple arrows is right there. You could have got in at any point. Even if it pulled back, that's okay. You still would have drifted and made some pips here, okay? And I'm just going through the pairs, okay? Nothing there, nothing there. We don't see anything yet. We don't see anything. Oh, look at there. Triple arrows on the 4-hour. See, just simple. Triple. and they got up, made you some good money. It was another one. Clean, triple arrows. See, any point you could have got in, as soon as possible, get in, place your stop loss, and move on about your day, and there it was. Nice money. Okay? Here's another one. I'm up 85 pips on this one. Triple arrows came in. Now this one I got in on the 1 hour, so I got in a little bit early because I found a confirmation. If you don't know what I mean, go back to the swing video, the swing trade video. Got in a little bit early on this one, but still the same thing. Even if you would have got in when the triple showed up, guess what? Right there, and 85 pips. So I can go on and on and on with this. I won't go through every single pair, but this is another example. GBP, USD, triple arrows came in right there at the top. Now this is an example of what I mean. See how the price came in, triple. See how the price is up close? So what I do is I'll put my stop loss not here above this line, but above here just to accommodate for any spikes that may happen like this here. See, these spikes could happen, and they can pierce through these resistance dots, so I give it a little bit extra comfortable room, and there you go, okay? And that move was for some pretty good pips right here. If you would have got in any point that here, let's just say from here to here, you would have made 137 pips right there, okay? Let's take a look at another one. Here's another one. See, once you spot these, you just hop in as early as possible. If you would have gotten that one, here was, let's just say here, you would have gotten in here, that would have been, what, another 51 pips or so. So either way it goes, you could spot these pretty easy. Here goes the 4 hour on the NZD USD right there. Here goes another example. You know, so you can just spot these. They're fairly easy to spot. Look at that. I mean, there's just no way you could not have seen it. And this is another example when the price is bunched up real close to these resistance. I'll put my stop loss up here just to give a little bit of extra room and adjust my my lot size so I'm not over leveraging my account, because that's one of the things. You will have to use a higher, your stop loss is going to be bigger numbers, but that's okay. So you just adjust your lot size to accommodate for it. But look at that massive move on the 4 hour. And what's even more beneficial is because you get less repainting of the big arrow on the 4 hour time frame. It will happen from time to time, but you'll see it's a lot less. Also, your winning percentage is way higher on this time frame, way higher on the 4 hour time frame than that of any other the lower time frames. The only cost is the cost to do a business on the higher time frames is it requires patience. Okay, it requires patience. My last recommendation is only be in about 2 or 3 trades. You only need 2 or 3 a week of these. You don't need to be in a whole bunch of them. Sometimes when I'm doing my videos, I may be in like 6 or 7 or 8 of them at the same time. That's just to show people on YouTube that our trading tools work, but I don't recommend it for everybody unless you have experience. So all you need is about 2 or 3 of these a week, and as you can see, they can generate from 50 to 100 or more pips a week, and when you add that up, you can easily be clocking out 2, 3, 4, 500 pips a week just on a few trades off the triple arrows on the 4 hour. And what's also beneficial is because every one of these candles represent 4 hours. So if you're working a full-time job, let's do the math. This candle and this candle represented your entire workday. 2 candles represent your entire workday. So that means you only need to come and check this every once in a while. You don't have to be on the charts all day long. You can go on vacation and still come back and this thing to probably play out, because even looking at this one, see how it went down, came back up, and then you have the triples right here? Okay, then as it's moving, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 40 hours. This one move took an entire work week of 40 hours. That's how much you're working at your job. So that means this one trade that took you 30 seconds to get in played out for your whole work week. So it's not like you have to panic and rush and be in fear of checking your trade every 2 to 3 minutes, because every candle represents 4 hours. So it's many, many benefits to trading off the 4 hour time frame. And it's easy to spot, just easy money, just really easy money. So I wanted to do this for you guys so that you guys can see. Here's one of my primary bread and butter trades that I do. Now, there are other trade methods, and if you don't know, take a look at the Stairmaster video off the 4 hour. That's another unique tool that you can utilize off the 4 hour, like this one here. I'll show an example. Triples came in right here, price came down, it came back, touched up against resistance, and created what's called the stairs. See, top of the steps, walking down the stairs on the resistance, and it kept going. That's another method, but either way it goes, just taking clean triple arrows as early as possible that you can find them and just get in them, Put your stop loss up there and let it ride, and you'll find that your success rate is going to shoot through the moon, okay? All right, hope this video was helpful for you guys, and I'll see you inside on Tuesday inside the trading class. Thank you, everyone, for watching this video.